Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video I'm going to take for the Forex Market Wrap. We're going to highlight some of the charts that we spoke about this week and the news. So going into the news first, we had a interesting week. We had a red folder week in terms of lots of high impact data. Now typically in weeks like this we do see the likes of the US dollar move to the upside, which is what we explained could potentially happen for the majority of this week due to the volatility, as well as some of the data sets that were meant to come out, which we have seen for this week, really, apart from today. The average hourly earnings today has kind of pushed the dollar to the downside, but for a large majority of the week we saw the US dollar stronger, and it was probably largely due to the amount of high impact data that was announced. So what other news was announced? Well, we had central bank data from the RBA. We saw the RBA hike interest rates by 25 basis points in here, which was an expected event. Again, the central banks slowing down the pace in which they tighten now, very much like other central banks at the moment. The Federal Reserve went next. We could see that they hiked interest rates by 75 basis points. This was pretty crucial. It was a forecasted event, so we were expecting a forecasted move where we saw a little bit of dollar weakness initially. What really caught people by surprise was the Federal Reserve, although them talking about slowing down the pace of tightening wasn't necessarily unexpected. It was the fact that they talked about the federal funds rate could be a lot higher than what has been anticipated so far. So I think that the anticipated rate is around about 5%, and the Fed have talked about hiking rates for longer rather than more aggressive moves. So I suppose that gives them a little bit of room to stop hiking rates at a particular point if the data does change. So yeah, that was met with positivity. The dollar rallied off the back of that. That has now come in since we had this non-farm payroll data, which although beat estimations, we still had a lower jobs number than before. We had a revised number of 315, came in at 261. Average hourly earnings went up, so that's a positive. However, unemployment rate did rise, so that's the sort of negative effect on the non-farm payroll numbers. Now, other than that, we did have the Bank of England announcement. They hiked by 75 basis points. Bank of England Governor Bailey talked about the fact that the UK is pretty much in a recession at the moment that could last 2 years. So, pound very bearish off the back of that news, and we saw pound dollar in particular fall quite aggressively. So let's move on to some charts. We can see here I've got the pound US dollar price up at the moment. So we've broken, or we rejected, the 116 handle. We explained this in the video yesterday, and it looks like we're going to be impulsing to the downside here, with targets being the 1 spot 100 level or the 1 spot 0925, where we can see price found some resistance and support in the past. Now the 114 level is an area of interest because price has recently found some type of support there as well as resistance over here. So if price was to climb back to this level and bearish price action did form, that could be an opportunity to see pound US dollar trade back to the downside. Going on to Kiwi then, so we expected Kiwi upside this week because of the price action, as well as the New Zealand dollar being the strongest currency on the strength meter and stuff. So really speaking, looking at the Kiwi, we wanted to see some breaks to the upside. We did get 2 failed breaks. Price tried to break through the highs but failed. The 0 spot 5850 level was the area we were looking to see price trade above, and we just kept getting pushed back from above those levels. However, after price retested the 0 spot 5760 and the dollar weakness came in today, it does look like we're seeing a bit of a move up, which could see Kiwi dollar head towards the 0.6 area. Euro yen. So euro yen didn't really do what we expected it to do. We were expecting to see the yen weakness continue, and we were looking at this area here at the 45 spot 50, which were these previous highs as well. And we were looking to see if price would break out of this consolidation and trade higher towards the 149 spot 75 or the 150 handle, and we just didn't get that in the end. Price instead started to fail, yen started to strengthen slightly, and we pushed all the way back down to the 144 highs, which were this area through here. Price is finding support now, but I think any kind of upside here we'd have to wait on to see if the yen does start to weaken again. Going on to our final chart then, so we can see that we're on gold here. Now, we did talk about gold coming all the way back down into the 1620 handle if it could retest this previous structure here around about the 1655 handle. And what we were looking for was just to see if price will come back, retest this level, find sellers and push back down to these lows, which played out pretty nicely. So if you were looking at gold around this level here, then that played out really nicely. Now, because of the dollar weakness, price has traded well back above the 1655 handle on this level here. So, you know, if we do get a break of 1675, that would be suggestive that we could see 1730 on the cards here. If we remain below 1675, then we might get priced in a sort of range bound market, and we could see potentials for 1620 again. So something to be aware of with gold. I'm going to leave it there. I hope you enjoyed the videos this week. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more of our Forex trading content. And I'll speak to you in the next video.